Hey friends, it's your old pal Peace Love Music here with another episode of Learn TA with Landy. Episode 18, Landy's going to go over setting conditions. Friendly reminder, this is not financial advice. Always do your own research and never invest money you cannot afford to lose. That being said, here comes Landy. Landy, how are you today, man?
I'm doing well, Peace. It's great to see you. And look, I mean, we've taken a little bit of time to get to episode 18 here. And specifically, we've covered a lot of ground coming into this particular episode, and we've covered conditions in various ways here and there on the charts and kind of, really setting conditions for different areas of interest and identifying things. Now we're going to dive a little bit deeper into that subject of what do I mean when I say that I'm setting conditions and kind of how that relates to my thought process for taking trades. I think it's very important that when looking for price action in markets to move in a particular direction, that you have conditions that need to be met for you to be looking towards those other areas of interest, right? So we've talked around this subject. We've talked about this subject. I've described it, but we're going to actually dive deep into the detail of it. And I think that this should be a pretty valuable one for those that have asked me a lot of questions about conditional analysis and what does that really mean. So I think I'm excited about this one because it literally starts to dive into how I evaluate trade setups.
Very cool. I'm interested. This is what I've been waiting for pretty much since the beginning. Like, we're going to get to the point where it's not just preparing. You're kind of figuring out where to actually take action and when to.
Yes.
So yeah. I dig it. I think you got your screen here. Let me turn you on.
Excellent. So one of the big things is this is essentially going to lead into a wider conversation about identifying trade setups, but we have to really hammer this point home in regards to conditions and conditional analysis and what I use to start defining the conditions for where I'm looking. Because then that conversation then is going to start to flow into how do I evaluate trade setups? What is on my checklist for swing trades versus scalp trades? What am I starting to look for across the various time frames where we've covered multiple time frames before, and kind of what it really starts to look like when we're moving from technical analysis into an actionable trading plan. So today is going to be about the setup, and it's going to start really simple. We've talked about the trend, support and resistance, volatility, momentum, my 4 key pillars to understanding how to perform technical analysis that can now be extrapolated out and used in every single trading system. So I don't care what kind of trading system that is, whether it's Gann, Elliott Wave, or pattern recognition systems, whether you're using trend lines or horizontals, it doesn't really matter, because at the end of the day, you have to set conditions for what it is that you are looking for to identify where price is going. And we have a pretty clear set of conditions, even in local price action here for Bitcoin. And this is going to be something that you can do very, very simply. We move from the higher time frame to the lower time frame, just like we always do, and just identify what's going on. It can even be a clean chart, no Bollinger Bands, no nothing. It can be just price action. And when evaluating price action here, we can see that this is a weekly time frame. And we can just very, very simply identify what is important on this weekly time frame. What is the weekly area of interest? And then we can start setting conditions around that for where we would be looking for price to go. And that will naturally lead to, when price eventually goes to these areas, what are the conditions that need to be met for us to start taking trades, right? And while we're not going to get into trade setups and methodology and trade checklists and all that today, we have to just really start with the very, very basic. And, weekly is pretty simple here. We've got a weekly close open support here. At least it's held as support. Last week, closing right on it, 93.5. We've had a test this week. We saw that it was resistance in late April. And this is a higher low. So in terms of trend, we have the uptrending structure here. Off of the higher low swing, lower low close, we had a downtrend break on a close. We had a nice higher low put in, and then a big move up. And then we have this other higher low here at 93.5. And then we also have the swing low here, which coincides with our swing high over here, which was a lower high. So we have a higher low swing, a higher low, a higher low close. And then we have, of course, the area down here of interest, which is essentially the lower high to the lower high close there. So just simply identifying this stuff is going to be a massive help for setting conditions, right? So now we have 3 points of interest. We can call this one our primary support for this range up here, right? And we can go ahead and just draw a box around it. This is a big area of interest from the weekly side of things. And then when we start to get into the lower high over here that was breached in terms of trend, because we have a trend break, we can just kind of paint this zone right here as well. And we'll utilize this higher low swing, as we do have that lower high swing right in that area. And we can just say this is kind of our red zone, right? And now we've got 2 areas of interest that are very, very close to each other. And I'm not quite sure, why is the box, I guess it's not going to actually link it up there. What's going on here? There we go. I guess not. But essentially it's 89 to 86 here for the lower high. And then we have 89 to 93.5 here. So that's the downside areas of interest that we can begin to paint the picture. We also have some other areas of interest. We have a close open right here, which is pretty confluent with this close open over here in the mid-range of the consolidation here prior to the breakdown. And if we wanted to define that area, we have kind of 3 big points of interest on the weekly, where the weekly has kind of rejected from this close open here, where we do also have another close open before the higher low came in. So that's going to be an area of interest for me, as we have just seen price reject off of it. Another big area of confluence for close opens is just above there, and you see the rejection candle right here from back in early February. And we've got another area of interest, right? And then, of course, we've got a few more on the way up. We've got the close open highs here at 104.5 to the actual all-time high. And now we've got some pretty clear horizontal areas of interest to the upside. And we can kind of paint them however we want. I'm going to leave this where price is consolidating as kind of no man's land. Nothing marked in here. There's no reason to mark anything in there. But we can start to make some stoplight scenarios here. So we can say, okay, from here to here, we've got kind of another yellow zone. We're going to actually change this zone down here to red. We're going to go stoplight. So we're going to go red, danger. We start closing below 86. We're probably going to run the major supports down on the lows here. And there's obviously going to be areas of interest on the close open, on the close opens on the weeklies to the swings here on the low side. But for right now, where price is, we don't really need to be concerned about that at this very moment. We can start to draw out another little bit of a yellow zone up here. So they're kind of stacked on top of each other with important areas of interest in between, right? And that's okay. We're just trying to color coordinate what we're going to be looking for on the way up and on the way down. And then the top zone here, we'll just make the green. So green means go. We expect price to go up from there. So now we are bracketing price action with weekly zones of interest. And then we can start to go to the lower term timeframes like the daily, right? And then we can define or refine exactly what it is that we're looking for. But just looking at the daily, we can very simply see that Bitcoin is bouncing on this one big weekly line. That's the weekly high or low on a close at 93.5. So from a weekly standpoint, it would reason that if we start to drop on a closing basis, 93.5 here, then what are we looking for? Well, we'd be looking for, from the dailies, the possibility that things could run the actual swing lows of this area. But you'll notice we haven't had any closes below. So from a weekly standpoint, all of these swings underneath 93.5 are fair game to $92,000 or so, right around 92 to 91.5, all the way down to that 89, because it's a weekly zone. So we can set further conditions on the daily as it relates to the weekly. If I start to see price closing below 93.5, fair game down to the upper 92 to 93 on the initial swings on the daily. Anywhere below there, even in lower term timeframes, I start looking at around 91.5 to 92 right here. If we start to drop that area, there is, some areas that to pay attention to on the daily here. There's like 90,000.5. There's also some confluent swings around that area, all the way down to that 89. And that's where we're just looking at the candles. We're determining, okay, if it drops a major weekly level, we then start to look at the dailies. And if it starts to drop those daily levels, we look to additional dailies within that weekly zone. Does that make sense?
Yes.
From there, we know that if we have the $89,000 breakdown, even on lower term timeframes, it's fair game on the daily into this weekly red zone. So we have some closes in here around 87.5. We have, the $86,000 area, which, by the way, was where we were getting all those swing highs coming in before the move up through these weekly areas of interest. So we have very clear, what we're trying to do is have a very clear understanding of the potential areas of interest for price. And by looking at those weeklies, understanding where some of these daily candles on the swings are coming in and on the closes are coming in, we can start to refine our view of price and where price may potentially go to find liquidity, or bids in this case, to the downside. To the upside, it's the same thing. If we start breaking above around $98,000, well, from a weekly standpoint, 102.5 up here is fair game in this zone, right? And in fact, that was a weekly area of interest over here. Now, in that same weekly, we did see some swings come up to actually make a higher high when we were just looking at that weekly. So we do need to understand that if we start breaking above 98, the potential is very clear. 102.5 is a very clear level of interest, but there is daily areas of interest along the way. Above there's going to be 104 to 104.5. And then, of course, above there, the all-time high and higher, right? So when evaluating this from the daily, we can have like a weekly chart, and then we can make daily areas of interest, and we can do all of that. So we can start refining our look on price as it relates to these different areas of interest between the important weeklies and the important dailies. And in this case, on the rise back up, if we start to see above 98, we can start to look for where are the swings coming in. So we've got a lot of swings over here, right? We have from the initial move up, we have this big swing high here. We saw the same area be rejected on a lower high swing. And then during the consolidation, we had swings into that area, a bunch of them that failed. And then we had the big drop. We can also see that when we look back at this first big swing high before this consolidation over here, well, we had this area act as support. So if we were to just take a line or a horizontal, and we can we'll make this one red, just because we want to be able to easily see it. Not that it means anything more than that, but in this case, I mean, it's a rejection area on the daily inside of a bigger weekly area. So when we look across, we can see, okay, we had a close open support here before making an all-time high above the more recent all-time high over there. We had a bunch of candles that did close on top of it, lost it, regained it, pushed off of it. When it came back down, held it as support, and then we see where it was resistance. We had a nice move up to it and through it. We came back down, moved up through it. We had a couple candles that sit on it. And then when we had the most recent all-time high run, we had this area actually hold up as support for quite a while here on the daily. And then it started to reject it after falling through it, right? So this would be a very important area for me on the daily as it relates to the weekly. And when setting conditions, you have to understand the context. On the daily, we can run into this weekly area and even test that $99,800 to $100,000 where this consolidation high side swings were coming in, right? But if we don't meet the conditions of closing above it on the daily inside of this big weekly, then I'm not looking for more, right? And in addition, because it's a big weekly zone, if we don't start closing above 98, I'm not looking for consistent price action in this area until I start to see dailies follow through with weeklies, right? So if we start to breach above the weekly level, we can look to the daily levels. And then above there, we start looking to the weekly levels again, and where they're confluent with daily levels. By the way, there is confluence over here at that 102.5 or so, with a bunch of swings above, swings right into it, even a close open right on it. And then the weekly, the daily rejection right there where the weekly ended up coming in. And that was where we had some weekly close opens, right? And this is where, you know, if we start to see dailies close above 98 and then dailies close above, you know, $99,000 to $100,000, we want to see a weekly in there, because if we haven't seen a weekly close in there, then it's very, very likely that we have to pay very close attention to the daily. Because if the daily was to reject down back into this zone, then we have to be looking at, you know, especially on a closing weekly candle, as we start coming in towards the end of the week, then we really are in no man's land in between this bigger area of support and a very big area of resistance overhead. So said a lot there. I want to check to see, where are you at? What are you thinking?
I totally get it. It really makes a lot of sense. Basically, so just to kind of reiterate, if it on the daily, it can still break this resistance line into this zone of interest. But if it doesn't hold there for the weekly, it doesn't really tell us anything. We're still back basically where we were, waiting for signals.
Yeah, basically, in what this tells us is essentially, let's say, and we can pull the reverse on that. Let's say the daily starts closing in $98,000, for instance. And then it's, you know, in between 98, maybe it closes right on 98. The weekly also closes there. From the weekly perspective, once the weekly closes in there, if we haven't tested up to $99,000 to $100,000 up here and possibly higher to 102.5, 104.5, so on and so forth, then those would be the preferred options overhead, right? Just purely from a support and resistance standpoint. If the daily hasn't tested up by then and a weekly closes in the weekly area of interest, then I'd still be looking or evaluating if the daily is going to be pushing up there because it shows potential to do so via the weekly close. Same goes to the downside. We start closing back below, let's say 93.5 on the daily, but it hasn't broken from this structure. It's playing in this weekly zone if the weekly starts to close in there, right? So even if the daily hasn't dropped down to test these other dailies yet, but the weekly starts to close below 93.5, the weekly will have officially lost 93.5. Doesn't mean that it has to, but it's playing within a different weekly zone of liquidity, right? So then I'd be looking for the possibility to remain open on the daily for it to test the lows and lower because the weekly would have closed below 93.5. Right. So you could take the opposite macro view to the daily view and the daily view up to the macro view on like the weekly, or the more macro view, I should say. And here's the big thing. When setting conditions, I always keep the macro trend in mind. This is a macro uptrend. We have a higher high. We have a higher low swing, right? And as it stands on the weekly, we have a downtrend to a trend break. So we know that in order to form an uptrending structure, when breaking a downtrend, we need higher lows or equal lows, right? Because we have higher highs and just simple trend, we need to be on the lookout for, if this is going to be bullish, it's going to be a higher low or an equal low, right? And that would be our reversal pivot. So we know, considering that on the daily, what we have to start thinking about is, okay, based on the areas of interest and the conditions that we're looking for to be set on closes, by the way, on closes, then what I'm going to be looking for is, at some point, we're going to see a daily pullback that turns into a weekly pullback. And then we can start evaluating higher, lower, equal low structure, right? So that's the conditions. Those are still conditions because we got a trend break on the weekly. As it relates to the monthly, we're in an uptrend still. So on the weekly, I'd still be biased, but cognizant that things could change, but biased towards a higher high being set. And then we start evaluating higher low, equal low potential. But how do we evaluate that on the weekly until we see closes? Well, we evaluate that on the daily. And in this case, we can set more conditions, right? We can say, okay, well, we've got these big weekly zones of interest as it relates to the dailies. We're just talking about areas of interest on the weekly, right? These are all weekly lines that we have here. Some are going to be closes like 93.5 to the 89, which is a swing. 89 is also basically, it's essentially the swing high of another lower high in the weekly to the lower high close open at 86, right? This is a big area of interest on the bottom side. We have an area of interest for close opens, not necessarily that set swings or highs, but close opens at $98,000. And then we do have a closing high at 102.5. We have another closing high at 104.5. And then between 104.5 and the 109, we have a big area on the daily and weekly. So we now know kind of what to expect and what to watch on the dailies for closes coming in towards the end of the week for the weeklies, to confirm whether or not we're just going to go sideways, or to give us more potential to the downside below 93.5, more potential to the upside on weekly closes above 99. If the daily hasn't already gone up there, then we'd still be looking for more potential, right? So we know that those are one part of our condition there, or conditions. And then, once we're evaluating trend on the daily from there as it relates to those weekly areas of interest, because we know what the uptrend is on the monthly. We know that it's a trend break on the weekly. What is the daily trend? So then we can go, okay, well, this is obviously a daily uptrend. Where does this uptrend end? Right? So we can start refining and getting really granular with our conditions here, because the daily is still in an uptrend. It's higher highs and higher lows. The last swing to close higher low is right here at 92.9, essentially $93,000. but we also know that there's a lot of swings right around here. All right. So, but we do know that the actual swing trend as it relates to the last higher low swing, and we have a nice 3 candle closing higher low right here as well. This is going to be the important one for trend. So we can say, all right, in this case, below 92.9, then essentially closes below there would be a trend break on the daily. But there's additional criteria. If we don't start seeing the lows lost,
we have maybe a friend of yours, looks like a runes guy representing Dog in the live chat, Pro BTC. He's watching on YouTube, and he had a couple of comments, and he needs some help. I guess he's having some issues following along. Oh, never mind. Maybe I'm mistaken. I'm having a hard time understanding what he's saying, but he seems like he's having a hard time following.
That's because he hasn't actually watched from the beginning, and he's been given a lot of information to kind of go through. So I think he's just got to catch up to where we are right now. That's all. I would suggest you got to start from the very, very beginning of our Learn TA with Landy series here with Peace and DeOrganized Media. You can go to the playlist and you can start with episode 1. That's really where I suggest that you start. This is very simple concepts that we've been building on now for 18 weeks. Or 18 episodes in this case. So I would suggest that you start out with those and then work your way up to this one, because you'll have a lot more insight on how to break this stuff down. But in this case, pretty simply, we know that on the daily here, what are we looking for? Well, if the trend starts to break, there is still additional conditions that we'd be looking for. Obviously, if we're playing back below 93.5 and start to drop 92.9, well, we're kind of looking at a zone right here on the daily as it relates to the weekly and this consolidation structure that back below 95 to 93, or I'm sorry, 93.5 to 93, we have to be very aware of the additional swings here. Below 92.9, we're essentially looking at, and you can take the lowest wick here before the closing higher low came in if you want. To be a little bit more conservative with it at 92.830, then we'd be looking to the next swings at right around 91.7 to 92K. And then we can look to where does that kind of come in terms of the dailies. So we see all of these swings in here that were pivot points. We see a low. We see another big low, but we see in this case, we see a higher low. We see a lower low. We see a bit of an equal low over here. We see a big old swing in here. And this is all coming in around the close open high area. Specifically, if you were to look right here, you can see it's right up against that higher low swing at, right around that 90,500 to 600 area. So we can really get granular and start identifying areas within the weekly on the daily here that are going to be important for structure. And the most recent are going to be pretty powerful. So like this guy right here is going to be an area of interest, right? And we can take it right to these swings. And we can say, okay, this is a big area within the daily structure that we have to identify before getting to the next weekly, which is also a big daily structure right here. And of course, the big weekly higher low swing. We also have a low set over here. So we need to be aware that if price were to fall below 92.9, okay, fair game down to 91.5, 92K. And then we're in another big area of interest, which was a rejection, was prior support. And that's around the 90,500 to 600 region to the actual low there. So we could see, price go and carve out some and try to find some support within the weekly zone of interest down there. But if that's lost, it's pretty much dropped to the bottom support at 89 based on prior price action and prior auctions. Now the same kind of thing applies to the other side. So we can begin to really refine some of these areas of interest, and it's going to be personal to you and how you want to set up your chart. For instance, we know that, okay, that would break trend, and then we have to be aware of this area, this area, this area, so on and so forth, right? Those are all conditions. Price starts to breach these areas, we look to the next area. And now we know that this is still an uptrend. So what would we be looking for this trend to continue to the upside? Well, in the meantime, in the medium-term time frames, we got a nice little bounce off the 93.5 area. To set a low on the daily, we know that a technical low in this kind of a structure would be set above 95-200 or so. So we can say that I probably should have drank some water before I sat down here, but we can say something like this. Okay, to set a low on the daily here, technically, we would be looking at closes above that 95-200 level. That would also put it above these closes over here. But realistically, for me personally, the close coming in, the bearish candle post high being put in, is an important one to regain. And there's a few reasons why. When setting a low, we prefer to see price recover where we just saw this high set in above the 95,865. You can basically call it 96 because of where we saw the highs come in as well. Closes above there would put it above all of the local closes and into the wick areas, right? $96,000 over here. And then, of course, going and testing the 3 candle structure that was just put in on this high. So we can start getting really granular with this information, especially because we can, determine what meets criteria later on for a scalp or a swing setup and so on and so forth. And we're going to be diving into that stuff. So we're getting into actual nitty-gritty detail because it's going to determine what conditions I'm looking at on the swing side or the scalp side of a setup for a long in this case, or the swing or scalp side setup for a short in this case, right, to the downside. But we've got some pretty simple stuff overhead. We'll see a higher low technically set above that 92.8, but I'd want to see additional closes and preferred closes above 96, right? That would really put us back into the closes to the swing up here to $98,000. And then, of course, above there, we can set conditions for higher. And, of course, that this would be kind of our green zone on the daily above there, especially on the close open. We can start to look towards the actual area of interest overhead, right? Right into this area of interest, right? So from the daily side of things, we can say, okay, red, danger, we're going to go test lower. Yellow gives us a chance to set a nice higher low, possibly test up towards the green zone up here at around $97,000 to $98,000. Above there, we're in the thick of the weeklies again, right? And in the thick of some other areas of interest to the upside. So we've got some pretty clear criteria to be looking for. So all we're doing is mapping out conditions for closes on price in the lower term timeframes as it relates to our monthly, our weekly, our daily, and then you start moving down those timeframes to see the confirmations come in candle by candle. Then you can start saying, okay, is this an area where I'm interested in the setup for a swing or a scalp? But if you don't do any of this process beforehand, and whatever your process looks like, it could be more complex, less complex, more conditions, less conditions, different time frames, different levels, doesn't matter. But if you don't do any of this first, there's no way for you to look at price and say, okay, it meets my conditions for a longer term trade, like a swing, either long or short, or a shorter term trade, like a scalp, either long or short. You have if you don't do any of this, you have no information to plug into, a checklist of like, this checks all the boxes for a long, this checks all the boxes for a short. And if those boxes checked are a scalp or a swing. And then you can do things from here that get you more confluence to say, okay, can I take if it was a scalp at first, what are the conditions for it turning into a swing trade, right? What are the conditions for me to exit? So if you don't have any of this information mapped out on your chart, you're not going to be able to do any of those things. Like, where should I put my stop? What are my conditions for where I want to take profit? All of that kind of stuff.
You can do them, but you're just guessing.
Yeah, you're YOLOing it.
Guessing, right.
Yeah. And that's what most newer traders do. And really what I'm trying to reinforce here is you have to have a logical system in place to trade. It's called a trading plan, right? And in that trading plan, you're going to have conditions that you are looking for to take those longs and shorts. And you're going to have to have all of the information that you can possibly get that's going to help you determine whether or not that is a good play to be in, right? In whatever direction you're in. So I trade all the time, every day, just about. If I'm not it might not be Bitcoin all the time. I'm in a swing long, for instance. I took a scalp short the other day that turned into a little bit of a swing short, right? On Friday, I took this would be Friday. I started taking
Can you
shorts.
describe or define the difference between a scalp and a swing trade?
A scalp is going to be an intraday trade in most cases. A swing is going to be anything longer than a day for me. Some might say like, no, I could scalp. If a scalp is you're in the trade and out of the trade within the same day, and some people have even stricter definitions for that are much lower time frame. Like, I'm scalping a bounce in a very low term time frame, move down or something that might be based on the 5-minute chart. Those are like extreme scenarios, but generally speaking, for scalps, it's intraday trading. For swings, it's going to be a trade that's going to be open for longer than a day. And that's the way that I approach it. And there is nuance there. But I don't think it's worth getting into the nuance of like, well, I'm scalping on the 3-minute chart as it relates to the 10-minute chart, as it relates to the 15, and the direction there for a bounce that is counter trend and is a counter trend trade versus an in trend trade, and like all this other stuff, which is gets very, very up its own ass very quickly.
Right. Well, it sounds like it becomes too many choices and too many criteria. At some point you don't ever have the criteria to make a trade.
Well, what I will tell you is, if you practice what we're doing right now, and in terms of setting conditions for the areas of interest for price action, once you're very well practiced with that, and then we start adding on things like confluences, like we talk trend, support, and resistance, because that's what this is trend as it relates. Trend forms support and resistance, right, in the swings. And in this case, we can add on volatility components, and we can get confluences, and we can get a lot of information from the daily, for instance, right now. Right, so we have the triple Bollinger Band setup that I've talked about. You can use regular Bollinger Bands if you like. I like triples because it gives us very clearly defined areas of interest. So if we take all of this and all of what we have here, and I'm going to just package this up into something that we can take on and off the chart simply. We'll call this Learn TA with Landy. And this is conditions example. All right, so we can turn that off, and we can look at a few other things here, right? So just evaluating where we are in this process of evaluation, we can take a look at our volatility here. And the bands give us some nice clear levels over here on the right. If you're not familiar with this band set, this is a custom band set that I've made and had a lot of help from others to assist. Shout out to Caretaker for allowing me to pilfer his code for the BBWP indicator, which is just volatility as it relates to the bands. We can see that this number down here is in the red, meaning that it's under the moving average, which is, I believe it's a 5 simple moving average. But essentially what this means is that volatility is cooling down for price as it relates to the bands. And you can see that price was consolidating, popped up a little bit, and then right back down. And in this case, we were moving from a more compressed band set, right? We had a compression over here, a move down to lower lows, move back to the median, and then bands kind of went sideways, and then we got an expansion. And now we are still pretty expanded in terms of the bands here, but we are, the price is moving sideways as the basis rises. This is a form of mean reversion. It's not where price is necessarily falling aggressively towards the basis here, which is a 20 simple moving average. We've covered quite a bit of this, but in this case, we see that price moving sideways while the band is rising is leading to price volatility cooling down within the band set, right? And in this case, we have some really nice levels with this indicator. It's one that you can find pretty easily up in the upper left-hand corner of the screen here. In fact, I don't think they can see the BBWP. I think our faces are over it, but it's there. It's giving us a volatility metric. I can actually pull this up in charted format, but it's just a little handy box that shows us that we're seeing what many would call volatility mean reversion. And in this case, that is because price is going sideways and our basis band is moving up towards price, causing a cool down in price action, right? So price, as it relates to the bands, is cooling down as denoted by it falling from the red to the blue here. And in this case, we have a wider set of bands. When moving from expansion into compression, we get some really clear levels of interest. And what we're going to look for now is confluence with volatility levels of interest, because this is the first standard deviation away from the 20. That's a volatility level of interest. The second and third also levels of interest. Lower first, second, and third, those are going to be levels of interest. And we can, with what we just looked at in terms of prices and closes and opens on the weekly and the daily, we can create some really robust conditions for what we're looking for. But generally speaking, when moving from expansion into compression of price, we start to see the bands compress. So expansion into compression, that does mean that when we start to move back up towards the upper first, it's more likely to get a lower term time frame rejection. Not always, but more likely. If we see it close above there, if it hasn't already tested towards the upper second in this case, that would also be an area of interest. In this case, for rejection, or if it closes above it, we're right back to expansion, right? Same for the downside. The basis band coming in right at the bottom side of the range here at 92.4 or so. That's an area that we would generally be looking for some lower term time frame support. But if it loses it, it's also losing the bottom side here. We're looking to the swings. If it loses that, we're looking to the lower first and where that lines up with price. This just so happens to be 88.2, right? Anywhere below there, lower second. And we'd be looking from expansion into compression here as the bands start to curl into each other here during this time frame. We'd be looking for first pass support in some of these areas like 84, which just so happens to be right around the bottom side closes of where price lifted off from, specifically right around that higher low swing before price moved up. Same for the lower third. If we look over here, you can see that we saw some support in this area right around where the lower third was, and even have a close open over here, which wasn't really that significant, but is around that area. So you're looking for what are the major confluences. So if we turn on the example here for conditions, we're looking for is confluence, right? So right around, we now have a hierarchy. If price starts to break below 93.5, we're looking kind of right around 93 to the additional swings where the basis band is, right? If we start seeing it close below there, then we're looking towards, the high side structure over here. If it starts to close below there, then we're looking for essentially around that $88,000 to $89,000 in the lower term timeframes as it relates to the daily, right around that $89,000 weekly. We have the lower first, right? And then anywhere below there, we're still in support and resistance zones, but we have a volatility area of interest that does outstrip our support areas of interest here. And then we need to be aware of where that lines up with our dailies. Same for the upside. Upper first is right around where it's right below where we want to see price start to close above to go and test, $88,000, or I'm sorry, $98,000 up here. So it's right around 96 and a half to $97,000. If this candle closes green or starts to push up towards it, it's probably going to stretch out to 97, come right in line with the close open highs on the daily. Anywhere above there, from a volatility level of interest, we're playing from the upper first, upper second, but there is the resistances. So what is the hierarchy here? When setting conditions, it is trend, support and resistance, and then volatility areas of interest. Because if we start to close above on the dailies, right, start to close above 98, we are looking towards, right around 99.5 to 100,000, or just shy of 100,000, which is right around where that upper second standard deviation is. And we know, or at least I've taught you, and I hope that people have gone back and looked, but we know that when moving from expansion into contraction, and we see the bands curling back down in, that this would be very highly likely a rejective area. It's right around the this consolidation range highs. But if we start to close above there, we would start to see re-expansion, right? Because it's closing above the upper second, and then we can start to entertain a trip to that 102.5. There is some other important closes in this area around 101, but from what we just charted, 102.5 would be fair game. Above there, we're looking right to where the 104.5, 104 area is by that upper third. And you just do this for the downside, and then you can really get granular. Like you can go down to the 4 hour here, and you can see that it's very well within this range that we've defined between the dailies and weeklies here. And this can give us some edge on the lower term timeframes. If we start to breach below 93.5, close below the most recent areas of support for this downtrend and the lower second, then we're getting expansion down into our red line here, which is the lows. Anywhere below there, we're starting to look to, where could price expand to below there, which would be down towards this 4 hour structure. Same for the upside. Close above the basis. We need to see closes then above the 93.2 to go test the upper first, which is right around these consolidation highs, right? Anywhere above the upper first, we start getting price expansion to the upper second, which is right around these highs and this rejection prior to the move down. If we start to close above the upper second, now we're back in expansion mode. So above the upper second and below the lower second are expansion areas of interest where we get aggressive expansion. That'd be expansion back up into the dailies. And because of the angle of the bands being pointed down, because the 20 simple is pointed down, that is the basis band, then we're really looking for, even if it starts to stretch out up here, we're looking for this to actually turn into a wick on first pass, unless we start to see the bands turn around and then get expansion up into this area. Right now it's positioned against price. So this would be an area of interest though, but it's right up against a major daily high level. We see the 4 hour tests up here by the upper third before putting in the highs. We see the close up here right on the upper third. So we'd be looking at this area of interest in depending on the setup and the approach of the bands and the trend we'd be looking for, possibly a rejection in this area around a daily high and a big weekly level. So we now have like a thesis that we can bring from our weekly to our dailies, all the way down into our major time frames below the daily. And that is where we can really start to actually make sense of, hey, where on my checklist am I going to be looking for the major trades? What time frame do I want to trade on? And that's going to determine what we're seeing in terms of long side, short side. And it's all about setting the table. This is all setting the table so that you can make those decisions. And we can now, begin to go through and look at, we got trend, support and resistance, volatility. We can look at momentum, and we're looking for confluences across all of these things, right? Momentum's at 94,250, right? So momentum is up on closes. So if it closes in the next 2 hours, we can see that we do have a little bit of a low set here. What does our RSI look like? We're in a bit of a cool down here because we have bounced up towards the basis band as it's been falling. So this is gonna present a pretty juicy setup pretty soon. But is there bullish divergences? It does look like there's a little bit of bullish divergence forming here, but this could very easily fall apart and come right back down, as this is still a downtrend, right? We're just seeing lower lows on the 4 hour here as it relates to this downtrend. Equal low closes, a little bit of a higher low close, but really it's lower lows. And what do we need to see to kind of break this downtrend? Well, it's this last high, which just so happens to be the daily criteria for setting that daily higher low, right? So now we have a very clear idea of, okay, as these 4 hours are closing, if it starts to close above 95,218 in this case, that would technically set a daily higher low, right? So from the daily, we want to start evaluating if price starts closing above here, how close we are to the daily close. If price starts closing below the lows here, where are we on the daily? How does this relate to the weekly? And then start thinking about, what we can infer from these various time frames based on, what's happening on even the lower term time frames. The big one would be start closing 4 hours above 95.2. We're probably going to test up further, at least locally, right, to that upper first around 95, $96,000, which is right around a breakdown area, right? And if the daily closes there, though, then we have a higher low in place, right? So that would be something to pay attention to, because we do have a daily higher low set in place. On the next move down on the 4 hour, if it doesn't continue to push up but closes and sets a daily higher low, then we can evaluate possible structure for, that would be a trend break on the 4 hour, a daily close, higher low, and then we can start evaluating, could trend shift, higher low, equal low structure from there, right? So this is just me playing out a scenario, an example scenario. So essentially, if we were to get, right, the conditions be met coming into the daily close for a higher high on the 4 hour plus set a daily higher low close, then we can say, okay, well, then even if it pulls back from 96, 97, from the 4 hour perspective, we have to be on the lookout for higher low, equal low structure from there. And then we can look for the trend reversal setup, right? So right from the bottom side, so we need to see a few things from there, right? We could, and this is just an example. This is not what I think is going to happen. It's purely an example for example's sake. We would have to evaluate wherever the high comes in as it relates to the trend. It would be a higher high, higher low, equal low structure, or the potential for it to be a potential deviation of trend, right? So there's two bigger scenarios that we're looking for: higher low, equal low structure, or deviation of trend, right? So on wherever, if this were to put in a higher high, we look for higher lows, equal lows, or continuation, which would be a deviation of this downtrend. But you first start giving it a chance. could there be the potential for higher low equal low? And then it needs to start to break above the most recent higher high. These are all conditions that you're setting based on what you're seeing. And you use that as confluence to form your thesis for whether or not you're going to be taking a swing or a scalp, a long or a short. And you're going to be weaving together all of this information across the time frames based on conditions that you set. And I think I've overused that word at this point, but that's what I want to drill into people's heads, because as we start getting into actual trade setup identification, we have to have the idea of how we are going to set conditions and what different scenarios we want to be looking for when our conditions are met. Like, I close below a certain level, where are we looking? Close above a certain level, where are we looking? What time frame? Weekly, daily, 4 hour, right? So it's just conditions on top of conditions on top of conditions, because you have to then be able to go and say, okay, I want to trade this particular conditional setup, long or short, long form trade or intraday trade.
Right. And it is important that people are making their own decisions. Like, no one's
Yes.
going to tell you how to trade in the best interest of yourself. No one's going to. Like, they try, but they don't know. So you have to be able to do it yourself.
I'd like to make a point too, regarding that. Is there is no system that is going to get you where you want to go. That's why there's so many different trading systems, right? There's so many different ways of doing technical analysis. There's a lot of like very well established systems, but one of the biggest things that you have to understand, even if you prefer a different system, the base of every system is the same, and you have to understand the base, and that is trend, support and resistance, volatility and momentum, because every system incorporates those. They just might have a different way of describing them. So if you have this stuff really etched into your brain, trend, support and resistance, volatility and momentum, and conditions of where to look for things, you can move to any system, identify how they're utilizing those 4 keys, and then you can better understand that system, whether it's Elliott Wave, Gann, or any others. Those are the 2 most popular ones that you see online. And that is, we start getting into Wyckoff theory and stuff like that, but that's a little less popular, and unless it gets popularized based on a setup and everyone starts to look at it and then comment on it. But realistically, there is the base that you can utilize this for trading, or you can take it to any system and identify how that system utilizes those 4 key components, right? Because Elliott Wave is going to have areas of where you're evaluating trend. That's what the waves are, right? That's trend. And you're identifying support and resistance areas of interest based on your trend and the Fibonacci's, for instance. And then the waves are the volatility, and the momentum is the direction, right? And the corrections, right? Is losing momentum based on different things, or gaining momentum based on the wave. So it's incorporating everything in there. Same for Gann. It's just a lot more pattern recognition and Fibonacci's and stuff like that, because we are going to start diving into how I use them, which, by the way, is going to make Gann and Elliott Wave people cry. But I have a way that I utilize fibs that is valid and works for me, because it's meeting my conditions that I'm looking for. Even if it does make them cry and want to rip their hair out and poke their eyes out, that's okay. It's just not their system. But I use it for percentages, and we do have crossover in the way that we utilize Fibonacci and stuff like that. But realistically, it's about percentages and pullbacks versus extensions and so on and so forth. But understand that you just have to move in the conditional analysis direction.
You can use a hammer to put in finishing nails on some trim board, or you can use a hammer to tear down an entire wall.
Yep.
The tool, that doesn't mean that either use is incorrect if it's doing what you're trying to get
Yeah.
it to do.
A hammer is a tool, but it can also be used for assault, right? Like
Right.
it's all in,
it's just another tool.
yes, which is a tool still.
Right.
And realistically, what I'm doing is trying to arm everybody here with the tools that they need to understand when diving really deep into this. Because look, if you're going to be performing technical analysis to the level that many aspire to, you need to nail down the basics and become so in tune with how to do this stuff that when I say, are the conditions met or not met for your trade setup, you can say yes or no and why. Right. And then that's where we get into, okay, if it's met all your conditions, what's your invalidation, which is essentially like your thesis or trade invalidation would be your stops, right? And then start relating that to areas of interest where you would want to take profit. Because one of the big things is everybody online tends to trumpet how much they've made on the timeline, and most of that shit is fake, by the way. I don't know a lot of like big traders that are actually going to share their real P&L for you. One, because that's a risk personally, because people, we've seen it, and we even talked about it on Dave's show the other day on ATC. There's, somebody's father was abducted in France and held for ransom, right? Like, if you start sharing a lot of that information out, it can become a danger to you about how much you're making on your trades. People will find you and try to do
you're
shit.
actually making that kind of money, if you're actually hitting on those kind of trades, or even if you're fronting that you are to get follows,
it's not
setting yourself up for risk.
It's not very smart in my opinion. Now that's just me. I'm also an old school Bitcoiner that wants to tear down the system and be as private as possible for as much talking as I do online. But that, you often also see everybody sharing a whole bunch of wins, and those that do regularly share charts and setups, they'll share the wins. They never share their losses.
Right.
There's only a few. There is a few that are really good, and they'll tell you what their invalidation is and
why the likes of Facebook and Instagram are so bad for us.
Yes,
actually, because it shows that it creates this false sense of reality that everyone's striving for that's not attainable, not real. No one ever people don't usually post their losses on Facebook, although I guess they do kind of, but it's the same concept. It's not real. It's not realistic.
Yeah.
There's a lot of work involved in winning.
Yeah. And you need to be able to understand what is happening if you want to have a robust conversation about things like trading. You have to understand the basics. And people like myself who've been doing this for a long time, and other spaces that the people that I associate with are generally going to want to help you learn more, because we want to impart this knowledge on others so that you don't go out and get yourself wrecked in markets that you may not be ready to trade. That's the big thing. And one of the other things that, as you start setting up conditional analysis and understanding what the conditions are that you are looking for to be met for price to go up or down, paper trade. It is the easiest thing to do, paper trade. And that once you've paper traded enough and you start defining and refining the way that you look at price action, you'll learn about what in your conditions need to be adjusted for what it is that you're looking for, right?
Right.
And then when you're ready,
you'll take bigger risks.
Yeah.
Paper trading. So it'll be a faster education.
Yes. And then you can start out trading smaller size when you actually want to start trading after you learn. Because I'm a big fan of iterative process, and you got to learn. And we have so many different platforms, and just about every single one has paper trading on it. I suggest that you check it out. And if you're getting antsy while you're learning, that's the perfect place to go and get wrecked, is on paper. and not on your actual account. That's a big one. And I'm kind of going through because I've gotten DMs over the past, few weeks about these subjects, which is one of the reasons why I wanted to revisit conditions. And we might even do another stream or two where we kind of refine based on some of the feedback that I'm getting from people that watch this series before we start diving into trade setup, because it is going to get into territory where we're dealing with multiple time frames and we're dealing with the conditions that we're looking to be met and how they weave into those multiple time frames. And you can get lost. It's easy to get lost, especially when you're switching around time frames and where are we on the daily, where on the weekly, what's liquidity looking like in this zone? Is this a counter trend trade versus an in trend trade? Is it this? Is it that? And you're looking through all of these different conditions that you're trying to identify for a trade. And it can get very complex for someone and overwhelming for someone very quickly. So practice looking at all of the basics: trend, support and resistance, volatility, momentum, define your conditions based on that, and then watch price. Watch what price does and observe how it moves compared to your conditions. Jump on a paper trading, exchange or fire up paper trading and watch price there. Take some YOLOs. Understand what's happening before even setting up anything for a trade plan. And then as you start to set up a trade plan, you will no longer be YOLOing on that paper trade chart. You'll start to actually be refining and defining what it is that you're going to be doing. But Peace, I know that we're a little bit over, about 11 minutes. I want to thank you as always, Peace. I enjoy doing this. It gives me a chance to hear myself talk, but also talk to you and get some feedback from you. I do actually get a lot of DMs because there's a lot of people that we know that love, to learn this stuff, that do DM me and talk about this.
So there's tremendous demand for the content you produce regularly with your videos Monday, Wednesday, and Friday. You provide TA analysis on a number of spaces on X on a regular basis. We're super fortunate to have you coming and laying it down on the basic level here on this series. I really love it. It's definitely helped me a lot just in kind of getting a feel for where things are going generally. Like I can look at a chart now and I can kind of get some. It doesn't take me very long actually to go and look at the I'll look at the quarterly sometimes, or I'll just go to the monthly, and then I'll just kind of take it on down and make some notes of key levels and stuff, and just kind of look at what I think might be happening. And it just kind of helps me have a better idea. It helps me in the news broadcasts. It helps me feel more confident that I kind of have an idea of what a lot of people everyone wants the number to go up all the time, right? And I don't like telling people that I think it's going to go up anytime soon if I don't. and I just temper the interest because it's not that big of a deal to me if it goes up tomorrow or if it goes up 2 months from now. I'm being usually. But it also does give me a lot of, I do a little bit of trading. I do more trading now than I would have a year ago because I feel more comfortable making these decisions because I have this knowledge under my belt now, and I can understand what I'm looking at better. And like you said, set some criteria, set some conditions that will tell me if this is probably going to happen, or this is what I'm going to look to have happen, or see probably this. And or if it doesn't, or if it gets there and does this is where I want to have my stop loss and stuff like that. This is like telling out, really like figuring out what I want to determine my trade activity is going to be. So it really is great stuff, man. I really appreciate it. And, I will keep doing it. I really hope I am, I'm sure there's a lot more to give to this audience. There has definitely been a tremendous amount of demand. We've had a few hundred people tune in for the show.
Yeah.
It's always great content. So thank you, Landy, and we really appreciate it. And for all of you that have tuned in, do follow Crypto Landy. Yeah, you can get the Landy bands at the link right over here.
There you go. Yep.
Also in I changed it, so I'm not mirror viewing anymore. So everything backwards to what I've been used to for the last 6 months.
It's all good.
So I will continue to probably do that for the rest of my life, point in the opposite direction, unless because I am an old dog and I cannot learn new tricks. But the Landy bands actually is a tremendous tool as well. Also make sure you're checking your momentum indicators and your RSI and stuff like that. That's important too. It tells you where the momentum's going and how to really get an idea of, it looks like it could do this or this, but maybe momentum might tell you it's more likely to do this than that, or that kind of thing. So Landy bands is a great tool. You can also get that at Landy's. The link is in Landy's X handle. It's also in the description below the video. And all of the Landy Learn TA with Landy series is available for free on the DeOrganized YouTube channel. It's at DeOrganized is our handle over there. And there is a playlist just for all of the past episodes of Learn TA with Landy. Thank you so much today, brother.
Thank you, Peace. I really do enjoy this, and it's always great to see you. I haven't been as active on DeOrganized Media as I would like to be, and in terms of morning and evening shows. Obviously, the morning's a little tough for me because I'm on the West Coast, but the evening shows. But I do try to come through when I can. Been a little busy lately. I think it's going to become much busier. So I do cherish this time with you and anyone else that wants to jump in. We had GP jump in that one day.
That was actually great. I had to leave. I don't even know how much longer it went because I didn't get a chance to view it back because
about an hour. We were just chopping it up. Yep.
At one point, I was like out. I can't remember where I had to go, but I was out. And I was like looking at my phone. I'm like, oh my God, they're still streaming.
Yeah.
I couldn't believe it was like still going. I was like, that's nuts. But I mean, we actually have a really, really great crew / community here. We're super fortunate, I think. We really do. We're surrounded by excellent people, very capable people, talent. There's a lot of talent and good vibes here. So thank you for being a part of it, man. Really appreciate you.
Thank you, Peace. And I do want to remind everybody for the Landy bands, they're free. I did get a question in my DMs. They're free. Yeah, if you haven't. And for the person that messaged me, how have you not? You've known me for like a year and a half and you still haven't went and looked at the Landy bands. They're free.
They're free.
It's all free. Yeah. But Peace, much love to you. That, of course, peace, love, music. So much love to you. I appreciate you. And we will catch you. I believe I'll catch up with you hopefully next week. If something comes up, we'll definitely let people know ahead of time, but hopefully next week.
Right on. And maybe tomorrow at with some live coverage of the FOMC meeting. You're always welcome if we do it.
Possibly, yes. I'll try to come through. The FOMC meeting is pretty important, especially with the macroeconomic environment and numbers that are coming out. So definitely.
They're not gonna cut rates, but what he says could be very impactful.
Yeah, I doubt they're gonna cut rates. What I will tell you is PMI. I'll give you a little preview. Little extra alpha here at the end. I learned TA with Landy. ISM report came out yesterday, and this is the services side. So services sector, measures across various business entities in the United States. One of the things that I found very, very interesting is from March to April, we actually had an uptick at 2.8% employment. One of the bigger things that has been holding down like GDP, you saw my post on this, I believe. What really was the drag on GDP was everyone was racing to get their imports in before the actual tariffs hit, right? So we had incredible amounts of imports and we had decrease in exports. Well, we're starting to see the import side of things contract, which will actually contribute to a positive GDP number. People think like, well, imports contracting means that prices are going to go higher. Well, yes, but we also had ISM reports come out and PMI reports and the rest showing that consumer spending and consumer income is up. So including now employment growth, which is positive. I think that things will eventually turn around, but because we're in this mixed numbers environment where things are contracting and some things are expanding and prices coming down in certain areas, but going up in other areas, specifically prices tanking in the energy sector, which is good because that brings overall supply chain prices down, kind of buffers the price increase for a little while here. I think Powell's going to sit on his hands and I think he's going to stick to his plan. If they talk about extending QT, meaning that they're going to continue at the pace of QT for longer, meaning that we don't get cuts like they want in like they've projected in June, then that's probably going to extend towards the fall, and that's going to, you know, cause a market reaction. But so far, I think the numbers are actually starting to turn around pretty nicely, and I think the latent numbers, once deals are done, are going to reflect a position of strength. I think that people who are bearish on the administration and maybe are going off of I feel like and not actually looking at the numbers might end up surprised, but it does hinge on getting deals done. If they can get deals done, which they've indicated that they're working on.
I think while we were talking, something came out about India.
China.
India just agreed to waive all import tariffs on the U.S.
Yes, yeah, they want free trade between India and the United States. That's big, by the way. Why huge. Is that? You know how huge that is? You know how huge that is? It's a BRICS nation. It's literally Brazil, India. And I mean, pretty soon they're going to end up with just Russia and China, right? It's going to be RC, right? Like they got to be careful, right?
They don't really like each other.
Yeah, and they do. Well, I mean, they like each other enough to fund each other and trade in Bitcoin.
Well, because they have. That's their only partner, really.
Yes.
And India is a direct competitor of China.
They are, and India knows they have the manpower.
Right.
But listen, I just don't. Whatever you do, India, keep the street food there. Don't be exporting that. Thank you.
I've never had the pleasure.
Yo, if you go to India, be careful eating some of the street food. Some of those videos that you see about the way that they're making that food on the street are real, and I can tell you from experience, even a long time ago at this point. I got very, very ill, and it wasn't because of the spices. Eating at like some of the actual restaurants, we're fine. Some of the street food is what got me, and that's where I got horribly ill.
I have a client of mine who works for a major toy manufacturer, and she had gone into, I think it was India, and she had to be there for like a month, and she couldn't eat anything there. She couldn't eat anything there. Like she said she lost like 30 pounds.
Oh my gosh.
Yeah. Crazy. Yeah. But I love Indian food.
Oh yeah, me too. I literally just had some buttered chicken last night.
But yeah, I love, I enjoy that stuff. I just, I don't tend to eat a lot of stuff, street food. Just because.
It's hit or miss. I mean, Southern California, some of the street vendors can be delicious, right?
Yeah.
Just kind of peek in there. What's the cleanliness looking like? That's all,
Right. Peek in. If you can smell the dirt, run away.
Pretty much. I've been places in California where it reminded me of some of the street food vendors in India. And I can tell you that I also chose not to eat there. So anywhere you go, and this is not to disparage India, but boy, oh boy, some of the street food there is not, even they will tell you, like, yeah, but don't go eat over there. Yeah, that juice in a bag. He was stomping on the fruit with his feet that he just walked down the street on without washing. Yeah, maybe avoid that if you don't have a tough stomach and you're actually from here. Like it's
Even
one of
if you
those
have a
situations.
stomach, you might want to avoid that.
I mean, just in general, but no, delicious food. Yeah, I actually have some leftover butter chicken. I think I'm gonna actually take off to go eat that because it's almost lunchtime, actually. So thank you for reminding me.
You're very
Um,
welcome, sir. You're
but
very welcome.
take care of yourself. I'll try to jump in tomorrow if I do get a chance. There is a lot going on, but I would genuinely like to maybe talk about what happens. It might just be after Paul speaks. So
If we're doing it, I'll send you the link. If you can make it, great. If you can't, no worries. No
for
obligation.
sure.
Love you,
All right.
dude. Thank you so much. Thank you all of you for
Much love,
tuning
brother.
in and watching us, especially this little banter at the end. Nothing's scripted, but Landy, I'm sure, has a plan for every show. Thank you, man. You have a great day. Thank you all for tuning in. We are DeOrganized Media. This is Learn TA with Landy, brought to you live in partnership with our good friends over at Bitcoin Live Decentralized Broadcasting. You all have an amazing rest of your day. And now, don't get wrecked because you learned some TA. Talk to you soon.